The market is all over the place today, so let's talk about XDTE and how much money you'd have to invest into it to make $100 every single week from the weekly dividends. The yield currently is sitting at over 30%, which is insane, and I've done a few videos on these before, so if you're interested in QDTE or XDTE, I'll link the videos down below and at the end of the video. If you want to check more into this one. I'm not going to go into the details of the fund as much, but we are going to touch on a couple things, the overview of the fund, the recent dividends that I've been paying out, which have been phenomenal, and then we're going to look at the drip calculator that surprised me, actually, and then we're going to run our calculation at the end. So I hope you guys enjoyed this type of content. If you do, there's a new animation when you like and subscribe. That's super cool. Check that out if you're interested in financial content. I put out videos every single week. I have been gone on a vacation, but I am back into it now, so I appreciate you guys being here. Let's go ahead and jump right into the details. In a world where NAV erosion is a very real threat, we can see that the Roundhill Fund XDTE is only down 0.17% all time. It has been trading all over the place. It ran up 6% and then dropped 4.5%. So far, it's trading sideways, which we love to see. With these funds, you're not buying them for price appreciation. If they can appreciate some, that's excellent. But still, I like seeing that's been trading sideways since March. It has not dropped 20% like we've seen other funds do, and that destroys your portfolio value. So currently, they're saying the distribution rate is a 34.88%, which is insane. We've looked over all this before. The fact sheet kind of shows an interesting chart. And now I'm just going to point out the main reason this is a different kind of ETF. So they sell 0 DTE, 0 days till expiration calls, which makes it so they can pay out every single week. Now, the cool thing with this too is because they're not holding these longer overnight calls, they are able to appreciate some of the value in the stock market that you can't with normal covered calls. So what that means is, let's say the S&P 500 goes up 1% during the day and 0.5% overnight. Well, on a normal long call for, let's say a month out, you wouldn't recoup any of that benefit. But for these funds, you're going to make that 0.5% overnight. Now, that also opens you up to the fund dropping overnight, which is very much a possibility. So it comes down to what you believe in the fund. And so that's why I like these ones so much. The expense ratio is 0.95%, which is a little bit higher. For those that don't know, the expense ratio is the cost of you holding the fund. And these expense ratios have been getting crazier and crazier. Like 0.6 used to be the high, but now with this, I understand why, because it's a lot of work to write these calls every single day. This is not like you're writing one call like with some of the yieldmax ETFs, and they're good for a month. Every single day, someone has to go in and write these calls and check and do the data research to figure out which ones are the best options and stuff of that sort. So it is really interesting. Assets under management, 16 million, a little bit low, but for weekly dividends, you're going to add in some of that risk, and I'm curious to see how these do pan out in the long run. If you guys want to check out their fact sheet, check out their website. There's tons of good information on there for you to know more. And if you want to see my other video on investing $10,000 into XDTE, I talk about it a little more in depth on there too. But there is a lot of potential with these funds. I've said that once. I actually own QDTE, and I'm waiting to purchase XDTE very soon. Looking at XDTE's dividend history or distribution history, whichever you prefer, we can see it was a little bit rocky and has jumped up quite a bit. Now, I think there's one main reason for this, but let's go down and look. Initially, they were paying 20 cents, 12 cents, even as low as 2 cents on that one, that's hard. But it bumped up to 37. It is a little bit all over the place, but recently, this is what's key. Recently, we've been seeing 35 cents, 41 cents, 38 cents, almost 39, and 38 cents again, almost 39. So the distributions have definitely increased, and I think this is due to volatility in the market. We've seen volatility jump quite a bit, and with higher volatility, you get higher premiums. So on these 0 DTE calls, they're probably getting some higher premiums because we're not really sure where the market is going to go, and that goes for everybody. Now, we're going to run some calculations here. We'll go to the dividend scorecard. The yield is off because it doesn't have enough yield history or distribution history for Seeking Alpha to generate it. But we'll take this $5.30 that it's paid out total, and we're going to divide this by 22 to get our average of 24 cents per dividend. Per distribution is 24 cents. We're going to take this 24 cents and multiply that by how many weeks are in a year, which is a little over 52, but we'll do 52 to be safe. And we're looking at a $12.5 per year paid out in the dividend. We're going to divide that by 51.91, and that gives us something we convert into a percentage by multiplying by 100, a 24% distribution rate. Now, lower than what they said, but I think it is really interesting to note that with higher volatility, we've seen the distributions increase. So it is very, very likely that if these continue, the yield will continue to rise. This is higher than the last time. I think it was 22% last time I ran this calculation, so I'm happy to see it did go up. I am, again, looking into buying XDTE, so I'm upset I missed out on these higher distributions so far, but it does show there's some good potential for this fund. And that makes me definitely hopeful. That with the fund trading sideways, even though the market's been all over the place, gives me a lot more interest in purchasing these funds and seeing how they do play out. Like I said, I do own a QDTE, and I think I'm up 2% since I purchased it like 2 weeks ago. So I'm pumped about that. I'm not going to sell. I know 2% is huge, and I could make so much money, but I think I'll hold on to it for a bit longer, and I am reinvesting the dividends, and I will be doing the same for XDTE as well. But now let's look at the important thing, the drip calculator for this fund. I am on dividendchannel.com using their drip calculator. We can see I have XDTE as the symbol, and we're going to compare it to just the flat out S&P 500 if you were to invest in both. Now, what really surprised me with this is XDTE is outperforming in both categories, dividends reinvested and not reinvested, which is crazy. Now, another thing too, this will show how you can actually compound the weekly dividends. So, it's very, very technical, but if you're comparing a weekly dividend payer versus a monthly or a quarterly dividend payer, because it pays weekly, you get your money faster. You get your money faster, not all of it faster, but to an extent, you're getting that money faster, and thus you can use that to compound. So if the S&P 500 is continuing to go up, you would be better off getting your money sooner, reinvesting it into the fund, and boom, rather than say a quarterly dividend, which is paying you out 4 times a year, you're not able to reinvest. Even though the quarterly dividend payouts are larger, you're still missing out on recouping some of that money with the reinvestment. So XDTE, I was so surprised by this. I have not seen a single yieldmax fund outperform. Okay, Coney. I think Coinbase, the Coinbase fund has at certain points in history, but besides that, I have not seen Coinbase. Even the Neos funds are really close, but I've seen them be lower mostly. So far, had you invested 10K into XDTE in March when it started trading, you'd be up 22.67%. If you had invested that money in SPY, you'd be up 21%. Both phenomenal returns so far, but I love how you're getting weekly dividends with this. That is insane. Not reinvesting dividends, you're still up well over 20%, 21.3% with XDTE, and for SPY, 21%. So only a 0.3% difference not reinvesting, which is what we would kind of expect. So I'm pumped by this. This actually motivates me to buy XDTE. I might be even purchasing it today. Who knows? But what we're going to do now, we're going to jump into the calculation. So I hope you guys are excited for this. Let's see how much money you have to invest into XDTE to make $100 every single month from the weekly dividends. So what we are looking for from this fund is we need $5,200 a year. So that $5,200 is our magic number because that's $100 every single week. And so I have everything plugged into dividend.com's reinvestment calculator. We're going to start with $50,000. No, we're going to start with $5,000 and see what this gets us for 1 year. It's not going to make it there. It gets us about $1,744, which is good. Let's bump that up. We know we need to at least double it. So let's go $10,000 and it'll be around, easy math, $34.88. So this is still a really good return with $10,000 invested. If we go up to $15,000, are we going to get there? Yes. $15,000 gets you $100 every single month, which is crazy. And what's our total? Our current price is $51.91. It even just changed. So 15,000 divided by 51.91, you would only need 289 shares, which is, again, 15,000 is a lot of money. It's less to some than it is to others, but $15,000 to get $100 a month, and more importantly, $5,000 a year is wild. So I did use their return rate. We'll see, or not return rate, their distribution rate. We'll see how accurate it is. It's 10% above what I calculated, but I like to use theirs to keep it consistent. But still, this is wild. And what's key with this is, let's say you hold this for 5 years. You're then getting $17,000 every single year in dividends, which is insane. That's insane. 20 years. Yeah, it just gets absolutely insane. Based off of this, you would be getting $1.5 million if the return rate stayed consistent. So, but even holding it for 10 years, I'd be fine with getting $77,000 at 10 years. You're now making more than the average American off of your $15,000 investment. Again, this is higher risk, and this is a crazy assumption because we don't know what price appreciation is going to do. We don't know if the distribution rate is going to go up or down. You never know. It's just based off of what this could do now, and trying to predict what the future could hold if it were to trade the same way. So again, I think this is a super interesting fund. I hope you guys enjoyed this video. If you did, hit the like button and let me know. I have a new camera coming in. I'm going to be doing some upgrading on the channel because I appreciate you guys and you've been helping me progress this channel, and I am super pumped. I love communicating with you guys. Drop a comment. Let me know what you think about this fund, about weekly dividends as a whole. Are we going to get daily dividends next? I'm genuinely super curious. But either way, thank you for watching, and I'll see you in the next video.